This segment is sponsored by Polston Tax, Resolution, and Accounting. Rachel Pappy, partner and vice president of Polston Tax Resolution and Accounting, joins me now to let me know the difference that you'll see at the 2018 tax return. So, Rachel, this first tax return, people will see the effects of the Tax Cuts and Job Acts. I hear a lot of people talking about the dependents being different this year. What does that even mean?
Yeah, so in the past, you've always been able to claim your dependents on your tax return. And when you claim your dependents, you get an amount that you get to take off of your income. So it would reduce the amount of income that you had to pay taxes on. Those dependents or exemptions have been repealed. So you no longer get to claim your children. So I get a question frequently now from family law attorneys and divorce attorneys that say, what do we put in the divorce decree? Who gets to claim the children? Well, it doesn't matter anymore in who gets to claim the children, in that you don't get to claim them as an exemption, but it does matter for like the child tax credit and certain other things. And if that law gets changed, you're going to want that divorce decree or whatever it is that you need to be able to say, I get to claim the children. You want it to reflect who gets to claim them.
So I feel like a lot of people watching right now, that was definitely on their minds. So that's huge. That's huge. I didn't even know that. So I guess alongside with the dependents, the standard deduction is a little different this year, right?
Yeah. So we've lost the dependents, the exemptions, which means you've lost that amount of money you can take off your income, but sort of to offset that loss, the standard deduction, which means if you're married filing jointly, if you're single, if you're head of household, married filing separately, you get to just take a set flat amount, and that amount, that standard deduction, which you get to deduct off your income, it's increased from what it was in the past. So it's just about doubled. Okay. And so more people now can take the standard, which is just a flat amount, instead of itemizing. So in the past, people would try to decide, should I itemize, should I look at how much my daycare cost was, plus my student loan interest, plus my charitable contribution? What does that add up to? Is the standard deduction more? Now, because of the increase to the standard deduction, a lot more people are just going to take that standard.
Now, what about the child tax credit?
Yeah, this is a good change. So the child tax credit has increased for across the board. The amount of the credit has increased, and more households are going to be able to take advantage of the child tax credit because they've increased the household income amount that's going to qualify. So because they've increased the total household amount, more families, I think it's more reasonable and in line with what costs are in this day and age. And then on top of that, a third change is that there's $1,400 of it that's refundable. So before, you could take the child tax credit, but you wouldn't get cash back if it zeroed out your total income tax. If you came, if you ended up with a refund amount because of the child tax credit, you wouldn't get any money back. Now you could potentially get $1,400 refunded in cash to you. Oh my God!
So a lot of changes this year.
A lot of great changes on that.
Yeah. And what would you say as far as advice for taxpayers this season?
Oh, so much advice this year. One, as always, file early. The quicker you file, the IRS is backlogged, and on a lot of the inquiries we've been doing, we've been getting response letters from the IRS saying, we have a delay due to the government shutdown. We'll respond to you another 30 days or 60 days or 90 days on this. We're seeing processing times on tax returns taking longer. But people that have filed early, tax season opened at the end of January. Some of those refunds are getting issued out. So the earlier you can file, the more likely it is you can get your refund deposited to you. Also, there's a lot of identity theft still, and if someone files with your social security number before you, and then you file, the IRS not only flags it and won't process your return, but that process of trying to determine who's the real person is taking a lot longer.
Right.
Yeah.
So I guess file early. That definitely helps.
File early, yeah. And I would say this is a year where there's a lot of great changes, particularly for self-employed and business owners, that if you don't have a CPA or professional tax preparer preparing your tax return, I'm not saying this to sell you, but this is the year for real tax savings under the Tax Cuts and Jobs Act. So you really need to get with a professional.
Yes, and we have a professional here, right? Thank you so much, Rachel. Guys, Polston Tax Resolution and Accounting has 4 metro locations. They have a few addresses, a new address, in Oklahoma City, and the same one for Norman, Tulsa, and Wichita. You can give them a call at 405-801-2146. They also have assistant clients nationwide. So get in contact with Polston Tax Resolution and Accounting on social media. Just look for Polston Tax. You can also visit their website at polstontax.com.